from the perspective of the results, it was an excellent set of results, probably a little bit higher than what most people expected, but it just shows that the business, when we acquired the Metcash Automotive business last year, has given us a lot of other levers within our arsenal of the business. Gives us three clear and distinctive segments between trade, retail and specialist wholesale, and each one of those have performed very well, particularly the underlying trade business. It's still our engine, it's our core business, and it's by far the biggest segment that we have. And it will continue to grow. It'll continue to be the engine within our business. But the other two will catch up, and the other two had very good performances. So overall, as Joe said, we had our revenue, and it gets a little bit distorted because of those additions. And it wasn't only the Metcash acquisition. We also had acquired a number of other businesses during the year, including a little gem that we've got called Bearing Wholesalers. But we've also acquired Precision Automotive Equipment and Sprints, which is a franchise group in South Australia. And since the end of the year, we've announced further acquisitions of Baxter's, which is an auto electrical business, and also RoadSafe, which is a four-wheel drive and suspension business, both in the specialist wholesale. They fit neatly into our overall structure. So in the specialist wholesale, that gives us the auto electrical. And when you think where motor vehicles are headed in the market with more electronics, more control systems, that's that particular segment, and we'll see that grow substantially over the next few years. So that segment will continue to grow. But they also have defence. They're supplying to the defence industries, also into marine. So you can see from that how it gives us some more avenues for the rest of our business to expand in. So it's not just about the historical results. They sort of speak for themselves. Not too many companies can deliver a 31% EPS growth in 1 year and be saying next year we're going to have similar, and even the year before wasn't too dissimilar either. So they're sort of targets that we're quite happy to sort of throw around and be proud about. So the overall result was good. I don't think there's a lot to say, or it's in the presentations about each segment, but trade was certainly an engine, but retail and wholesale also performed well. I'll just clarify one thing with the wholesale, which I probably should have been a bit more careful about. We've said that we didn't pass on all the price increases that came because of the depreciation of the Australian dollar, and also that that business we'd lost some sales. That was all expected when we acquired it. So it's not as if it was a negative in the result that we reported. It was just putting in context that there are some levers in there that do affect the overall business. So we had to find some negatives, and they're the ones we put in. So, but it's performed as we anticipated when we acquired the business. So probably just clarify that. There's some stats on the trade side in the presentation that show store numbers for the trade, the same-store sales growth across both major segments. Same-store sales growth in trade was up 4.6% and retail was up 5.2%. Again, you don't find them in too many industries at the moment. And we also are able to increase our margin as well. And in this coming year, margin will also increase because we've already indicated that we're getting from some of the synergy things with the optimisation projects from bringing the two businesses together, the supplier negotiations, that will also come through in this next 12 months. So overall, both a good year across all segments, and going forward, we've already done some of the acquisitions have been announced already in this year. There's more to come. There's the continual rollout, like we've indicated, we'll have another 40 stores added to the network in this 12 months. They're already well underway, with 5 already having been added in the trade business, which is now at 150 stores. And we've also got, so over the year, there'll be at least 10 to 12 in that segment. We'll be adding similar numbers in the retail side, and then also a lot of the opposite lock store within store. So the four-wheel drive segment will grow as well. So overall, we expect over the next year, as Joe said, another 25 to 30% growth in NPAT, which also then flows straight through to earnings per share, because we're not planning to issue any more shares, not in the short term anyway, not unless we do something substantial. And that's always on the cards. So the business is travelling well. We don't expect too many road humps. It'd have to be a really significant thing for us not to deliver what we've indicated.